Howdy, it's Reggie, the Mortgage Cowboy, and welcome to the Big Three. Now, these are the three biggest stories, three biggest things that have caught my eye, and I want to share them with you. Now, let's start off with the Fed and what's been happening. It looks like they've holstered their rate cutting guns for the time being, and here's what that means for you. Chairman Powell recently said they'll need more proof that inflation is cooling before any cuts will happen. Now, the next meeting is on May 7th, but markets are now seeing possibly the first cut not happening than late summer. Mortgage rates follow the bond market, but not the Fed directly. But a cautious Fed keeps investors nervous. So the 30-year fixed rate mortgage averages are still in the high sixes this week. That's down a hair from last week, which is good, but nowhere the fabled fives where everybody wants to be. If you are in the process of buying a house, I would look at locking your loan because we are in unknown territory right now. The truth of the matter is this: we cannot rely on the metrics that we have used in the past to help predict where rates will be going. We're in a spot where a lot of us have never been. You've got public trade wars happening, all the back and forth with the tariffs, right? We've got the value of the US dollar that's coming into question, and you've got a market that reacts to every news story out there. There is some hope that we can get a little dip in rates, but in today's world, there's always a risk of rates increasing at any moment. Now, it's best not to play chicken with the market right now, unless you just like to live dangerously. I do have a couple loan strategies that my clients have utilized to help lower their payments during times like these. Send me a message or comment on this video, and I'd love to talk with you about that strategy. The second headlines is this: that contracts signed for new purchases has been up. It's up. Pending home sales jumped 6.1% month over month, which is the biggest jump since December of 23. That tells us that buyers are done sitting on the fence. And even with the rates in the mid sixes, there are still more listings hitting the market and buyers are jumping on them. Now, if you're a real estate professional, you definitely want to have your clients' pre-approval letters locked and loaded, right? If you're a buyer, you want to make sure you are ready to move quickly when submitting an offer. Make sure you have everything in order with your mortgage lender and realtor before the weekend showings. Bidding wars are back in certain areas. Now, the third and final story is student loans collections. They're riding back in town and they are not being friendly. Starting Monday, May 5th, the education department is going to start taking action against student loans that are in default. That means wage garnishments or even going after tax refunds are back on the table. This is something you don't want to mess with, and they aren't going to mess around with you. If you have a new collection on your credit report, it can drop your score from anywhere from 60 to 100 points. That's enough to ruin that pre-approval that you've got going on right now. If you've been dodging those emails, you want to call your servicer today. Ask about a repayment plan or a way to help you get back into good standing. Whether you're looking to buy, whether you're looking to sell, or maybe even refinance, I'd love to help you and your family. Send me a message, make a comment on this video, and I will get connected with you to help put a game plan for you and your family.